So today you're going to find out how you can invest your way out of your corporate job. That's what Ryan McKenna did. We're going to find out how he did it. So Ryan, welcome to the podcast. Glad to have you here today.
Thanks, Jonathan. I'm excited to be here.
So please, in like 30 seconds or less, just give me the current snapshot of who you are, and then we'll jump into your story.
Yeah, current snapshot. So I'm a full-time real estate investor, syndicator. We've done about 90 syndications at McKenna Capital. I've invested in over 100 deals as a limited partner, and really love this space. Our whole goal is really to help other people who have interest in kind of growing their portfolio and uncovering these types of passive investment opportunities. It was something I learned about at an early age, and it took a while before I had some money to do this type of investing, but it's completely changed my life. And so I really get a lot of satisfaction and fulfillment out of helping others. And we're a national syndicator, and I'd say probably 85% of what we do is value add multifamily. The other 15% or so is going to be more alternative assets. And so, we like anything that cash flows, has some good equity upside and great tax benefits. And that's really what we're syndicating.
Awesome. Well, there's a lot of interesting stuff that we talked about before we started the recording that I'd love to delve into while we're on the recording itself. But, the first thing that you said to me that was really intriguing was that you invested your way out of your corporate job. And so I'd love to talk about how you did that, because that's something that obviously a lot of people who are listening to a podcast like this want to do. Whether they become an active syndicator or not, they want to learn how to create enough passive income that they now work, by choice rather than by necessity. So tell me how you did that. How did this come about?
Yeah, so I started my real estate investing journey back in 2006, but that was really more single family, trying to kind of, learn what it was like to be a landlord. And I realized there's certain things about real estate investing that I liked and other things that I didn't like. But I got to a point where I had some capital that I could invest. And really in 2016 was when I started deploying that into real estate syndications, primarily multifamily. And I did that over a period of 3 years. I invested in 12 different deals, and I did it with 5 different operators. And so I got a good feel for different markets, how the deals were structured, the type of returns. And I was generating about $50,000 in passive income just off the cash flow. And then as I got a few years in, that's where it started to get fun, where we had some, capital events where we went through a couple of refinances. And so with that, combined with the cash flow, I was kind of getting to the 6-figure point. And with the way these types of, deals are taxed, and the depreciation benefits, it was really a great, solution that I think I hypothesized over a period of time, saying, well, hey, you can do it actively or you can do it passively. And I was like, I'm going to go the passive route. I know about these syndications, and I just continued to keep investing. And then before I knew it, I was like, wow, this is actually, really working, and I have a strong foundation of passive income, and I can continue to keep, deploying capital to keep building my portfolio. And that's what I did. I mean, I actually stayed probably a year longer than I wanted to at my job, but I wanted to pour as much money as I could into this to give myself, the best start. And then from there, I started McKenna Capital and continue today to keep.
So let me ask you, sort of, what were you doing? What was your corporate job?
So I was a commercial insurance broker. I was, a producer. And so I was out building relationships, primarily, in a sales type role. And so I built up a nice book of business there. Had a very comfortable life. I did very well, but it wasn't my passion. And so that's where, I kept, gravitating towards real estate investing. And, but I feel like I had, some good background kind of getting into it, because I did have a focus in the property casualty end of the commercial insurance for real estate investors and real estate groups. So I was always close to what they were doing, what they were building. I just saw it kind of through a different lens, and it was easy to make that leap.
And sort of starting out, like how much were you investing each year? Because it's like, I mean, if you don't mind me sort of digging into this a little bit, I mean, you can stop me if I get into stuff that's too personal, but so people are trying to figure out like how you replace your income. And let's say, you got a, high 2-figure or low, high 5-figure or low, 6-figure job. And you're trying to figure out how it can, replace 6 figures of income just passively. Kind of takes a lot of income. If you figure, even if you're going to get like 10% on your money, you've got to have $1 million to invest to get 6 figures, right? So how did you actually do it? If you could kind of explain the process of like how much money you're putting into deals, how often you were investing, and sort of how you replaced that cash flow from your job.
Yeah, so I did it 2 ways. I did it with current income while at my commercial insurance brokerage. I mean, I was doing really well. I was, making, high 6-figure income, but really where most of my capital came from, I started a business back in 2007. So I've always been entrepreneurial. I've always been a big fan of the side hustle. And so I've always had something going on, while I'm working full time. And so I started a business that, I was able to scale to over $1 million in revenue in 5 years by myself. And it was
what kind of business?
So I was buying and selling season tickets. So basically kind of like a ticket broker. And at the height, I had probably 70 different teams that I had season tickets to. And it just kind of started with 1 or 2 teams. And I was buying and reselling. I was making a good profit. And then I just started scaling it. And this is kind of a crazy story, but back in like 2008, when we were going through, the crash, and, I tested out kind of this business model. I really believed in it, but I was putting everything on my credit cards to fund this. And I was, several $100,000 in the hole, because when you buy these tickets, you have to buy them 6 months in advance and then sell them at a later date. But I really kind of believed in what I was doing, and I was seeing early signs of success. So I didn't really kind of stop or scale back when we were going through the, that last recession. And it paid off, because I was able to continue to keep growing the business. And a lot of people gave up their season tickets. I was able to get better seats, get more tickets. And so I grew it into really nice. This was my kind of first experience of passive income, because I would work a few hours a week and kind of at night, and I could do it all remotely. I never had to talk to a person. And so it was kind of completely different from my day job, but I ended up doing really well with that. And so at the end of the day, I felt like, well, I wanted to put this money to good use. And I felt like, this business could be gone in a few years. But real estate, if I invest in that, I'll have it for generations. And so I took a lot of the profits I had there and started deploying that. And, so I probably, within 3 years, I think I put maybe 650,000 into those 12 deals. And then from there, I just continued to, keep investing. And so that was kind of my start. I mean, yes, maybe I had a little bit more than some, but I also talked to a lot of investors that are like, hey, I got $1 million in the stock market and it's not doing a whole lot for me. How do I deploy this? And so there's a lot of people in that situation that, might have money in other places that they want to repurpose. But for me, it was, kind of a combination of using money that I was making or had made. And I knew where I wanted to put it, because I had been studying these syndications and multifamily investing for many years.
I mean, so this is interesting because, as I've been through my own kind of real estate journey, right? Like a lot of people get into real estate investing or get into like syndication and stuff as a way of making money or a way of like building their own fortune. But, historically, real estate wasn't like the way that you made money necessarily, is what you did with your money once you made your money somewhere else. Like to put, you worked for money, or you had a business and you wanted to put it someplace safe that where it was going to work for you, but also be protected. You put it into real estate. That was like the thing. And if you think about sort of like I'm sort of leaping to another analogy, but if you think about sort of how Warren Buffett like really made his money, right? He's like, I know how to pick stocks, but I need a source of capital. So he bought Berkshire Hathaway to provide him with funds to invest in stock, right? Yeah. So it's kind of like you almost did the same thing, where you had the side business that was generating money that you didn't need to live on. And you were like, well, what am I going to do with this money? I'm going to put it into something safe like real estate. It's sort of like building that flywheel of, once one bucket of money going into a bucket, another bucket that's going to make it bigger, So I love that model. I love this idea of like the side hustle. I mean, you can obviously do this with your job. Your job can be the source of your funds, but often people are having to live off that money and they don't have a lot left over to invest. It's harder to scale up. But obviously, if you have a side hustle or some other source of income, you can do this. So I think that's awesome.
Thank you.
So tell me how you, so you mentioned very briefly, sort of back in 2006, you were doing single family houses when you got started. So tell me about sort of how you got interested in real estate in the first place. And, by the time, obviously 2016, 2017, you started really investing in it, you already had some kind of background, like at least you knew what you wanted to do. So tell me a bit about some of your early real estate journey.
Yeah, I feel like I was pretty fortunate in that I had some people around me that I was close to that were already doing this back in the early 2000s. So I got to kind of see how they were doing it. And I got to see a lot of the success that came with it. And I always told myself, well, I want to get into the syndication business. I want to invest in apartments. And really, it all started. I mean, I grew up in a very entrepreneurial family. My dad runs a business. I actually worked with him for 5 years. So I was in the family business, and just, it's kind of in my blood, always, be a, hustler, entrepreneur. And I always wanted to have my own business someday. And I just felt like, well, if I can do it through investments, it's kind of a cool way to have your money working for you so that you can go and, do other things with your life and spend more time with your family and friends. And so there was always this appeal that, like, I was going to somehow make money and then invest it and just, live off the cash flow. And so I initially thought, my first passion, first dream was I wanted to play baseball in the major leagues. And so it was something I had worked really hard. When I was 12 years old, I wrote down all my goals, and, was very disciplined and had a, very strong work ethic. And my goal was to, at least get to, Division I baseball. And at the top of the list was Arizona State University. It was my dream school. It's one that, drafts more Major League Baseball picks than any other Division I school. And so I was fortunate that, they somehow found a kid from Elgin, Illinois, who, had some talent that they liked. And so I was offered a scholarship to play at my dream school. And, at that point in my life, I felt like I was at the top of, where I wanted to be, athletically, and, put myself in such a great position to, potentially go on and play at the next level. And my freshman recruiting class, we were ranked number 1 in the country. We had just a ton of talent. And so when I got to Arizona State, I was on this path that I was like, okay, well, if I keep going, maybe someday I'll get to, an opportunity to play in the big leagues. And then if I make some good money, I wanted to invest it. And so long story short, I ended up, towards the end of my sophomore year, I ended up getting really sick. I'll never forget, I took myself out of a game. I was playing center field and we were playing Stanford, and I immediately, just felt nauseous, and I had bruises all over my body, and just, never felt like this sick before. And so I called my uncle as a doctor, kind of explained my symptoms, and he's just like, you got to go to the emergency room right away. And I'm like, oh man, what's going on? So I got diagnosed with ITP. It's a blood platelet disorder, very similar to leukemia and lupus. And at that point, my life had completely changed. I was in and out of probably 20 different hospitals. I ended up in the Mayo Clinic in Rochester, Minnesota, and we were really trying to figure out what was going on. How did this happen? I'd never been sick before, but the doctors kept coming in telling me, look, your baseball dream, that, you're going to have to find something else. We don't think you'll ever be able to play again or get back on the field. And so obviously that was a huge, blow to me, because mentally, like, I had prepared for this day since I was 12. And I was like, no, I want to go out on my own terms. I don't want something to be taken away from me that I don't have any control over. And so it was in those moments where I, couldn't do anything other than sit in the hospital bed and read. I came across several real estate books, one of them being Rich Dad, Poor Dad. And then a teammate of mine, his father was an apartment syndicator in Phoenix. And so he was buying up a bunch of apartments. And so I kind of took a liking to what he was doing. And so he would send me books on commercial real estate investing. And so it was just kind of this thing I did when I was in the hospital. I was like starting to have to think about, an alternative plan for my life, because my baseball career that I thought, I was going to, give it a go and have a realistic shot at, I'm no longer going to be able to play. And so I had to sit through a medical red shirt my junior year, and 17 of those guys that came in my freshman class, 16 of them went pro, and I was the only one who didn't. So I had, obviously a really good shot, but it was, a change in my life. I like to say I was throwing a curveball, and I just had to repurpose, refigure, what I was going to do. But the good thing for me was that I had, my discipline, my work ethic, all that stuff. I just translated into the business world, into what I could. And, I was able to come out and finish my senior year on the field and play again. after doing a year of rehab, but I had to literally walk away again at the end of my senior year when I graduated, just because it wasn't worth any health risk to go and try and chase a dream of, playing professional baseball at that level. So that's really when things shifted and I got into the business world. And then real estate was always my target, my end goal. Like I knew when I made money, I was going to invest it in real estate. And that's kind of how everything started. And so you can imagine how much energy and time I put into my baseball and that dream. I've now, shifted that into real estate syndication, real estate investing. And, I've seen the real opportunity. I mean, you can make pro baseball money in real estate syndication. And so for me, it took a while to get over that identity of who I was in the past, but now I found something new that I'm super passionate about and love sharing with others. And so that's kind of my journey, what motivates me and how I kind of got here. And so it's a little story of, why I'm a big baseball fan and have the bats in the background. I've got, a lot of teammates that went on to play in the major leagues, and one of them was Ben Zobrist. And so I'm a big Cubs fan. And so I played with him over a summer, and, so it's really cool to, live vicariously a little bit through some of my teammates and, kind of share that baseball journey that, turned a little different for me.
I've got to ask you, but I want to ask about your work ethic, but actually before I ask about that, I got to ask, did any of your former teammates or guys you played with invest with you?
Yeah. So I
mean,
do have a lot of professional athletes that invest, which is kind of cool because, they're sometimes in a situation where they don't know who to trust, and, they're in a locker room with a lot of other, people who have, in the same situation where they've got money and they don't really know, they're dealing with an agent or a financial advisor. And so it's been really cool. I work with several firms too who cater to professional athletes. And so it's just been something that it's allowed me to stay close to, that part of my life that kind of has come and gone athletically.
Yeah, I mean, I always advise people who are trying to get started in the business when they ask me, well, how do I find investors? I just tell them, like, well, go find the people who are just like you, right? Like, go tap into the network that you already have of, especially if it's something specialized, like being a pro athlete or, being a lawyer, being a doctor. It doesn't really matter what it is. If you're in some kind of field where that's taken some kind of achievement to get into, people already who are in the field already trust you because you're one of them. And people are always like, well, who's going to trust me? I don't have a track record. I'm like, well, that doesn't really matter because they already trust you. Go partner with somebody who's got a track record, and then you've married both halves together, and you'll be fine. So it sounds like whether you intended to do that or not, it's kind of what you wound up doing. But it must be, I'm sure that those guys are always on the lookout for people who are not trying to take advantage of them somehow, right? Because obviously they make a lot of money, they're targets, they need people that they can trust to invest their money. And since you're kind of from the same, you've got that background, right? That they share.
And there's that special bond that, when you're in the trenches, day in, day out, working together on the ball field. I mean, that's a lifelong, relationship and trust that's developed. And so, it was really never about, and I've always kind of taken this approach with investors, like this isn't any sort of sales pitch or anything like that. I mean, I look at this as an opportunity that, when I was investing myself, I was just sharing what I was doing with others. And it was amazing how many other people were like, well, I want to do that too, or I'm really interested, keep me in the loop. And that's just kind of how everything started. And so I always took the approach like, hey, if someone had something that they were really passionate about, that they found that they think was, a good opportunity, I hope you'd share it with me, and that's just kind of how my approach was with others, where I just, wanted them to know that this other opportunity to invest money exists outside of Wall Street. And most people, I think 99%, I always say, don't even know these types of deals exist. And so it's kind of my mission just to share, what's out there and let them decide if it's a fit for them or not. But at least, they're aware of it and they know, and they can kind of look at it and get educated. So that's really kind of been my mission at McKenna Capital, really just to help others,
It's funny when you're in this business and you're constantly talking to people who are in the business, and you're surrounded by people who understand that. It's hard to remember sometimes that most people don't know about real estate syndication. Very oftentimes when you tell them about it, they're like, really? Like, I could own a part of an apartment building? Like, I never knew. And they get really fascinated once you tell them, because they just have no idea this is even a possibility. They just think like, okay, my opportunities are like, stocks, bonds, mutual funds, and I could buy a house, or maybe I can buy a, second house as an investment or something, but they never they never think that, hey, there's kind of like a professionalized industry you can tap into of people who do this for a living, oversee these assets for a living, and for a relatively small amount of money, you can be part of it.
Yeah, I think it's just fascinating. And what we've seen is like, once an investor invests, I mean, I would say the number is got to be probably 90% or so come back and want to do it again and again, and it becomes more of a strategy. So I feel like, there's a high rate of return for investors coming back once they learn about, this type of investing, because it is something that they're like, oh, wow, I can get cash flow and have, upside, and know there's these great tax benefits too. And so I just think it becomes very appealing, and it's something that most are excited to talk to their family and friends about. And so, you get, a lot of people that want to invest together, and it's kind of fun to do it through syndications and do it with other people that, are in the deal together, and you can, share that experience with them.
So I do want to come back to this work ethic question, because it is quite interesting. I mean, you, by the age of 12, had already set this goal for yourself of going to a place like ASU and, making it to the pros. And that's not like, most 12-year-old kids don't have that kind of work ethic. And you mentioned about how you've then been able to transfer this work ethic to your real estate business. So where did this come from? Like, where do you think this work ethic developed?
It's one of those things, like, I don't know if it just born this way or trained my mind to kind of, I was really big into Napoleon Hill and reading, the self-help books. And I feel like, after a while, you just kind of immerse yourself into personal development, that it just becomes kind of second nature. And I think for me, like, I love sports. I love baseball and soccer. Those are kind of my two sports that I, excelled at. But I was never like the best athlete. I mean, I had to work for it. And, I think there was just something about, I just enjoyed the satisfaction of getting better each day. And, there was no shortcuts. And I felt like, well, let me push myself to the limit and see where we can go with this. And, it truly was, a dream come true to be able to, get to play at a place like ASU, and to go through that whole process of, being recruited from different schools. And, I was just, a kid from Elgin, Illinois, that, it's like, how did they find me? And so it just sometimes being in the right place, the right time, but also being prepared when you have that opportunity. And I think that's what I saw in real estate too. Like, I had been studying and, had made some money on the side. I knew exactly where I was going to put it, because I had been just preparing for that moment. And so I think when, I started McKenna Capital, we got off to a pretty good start, because it just all was very natural, second nature. And I was just like, well, hey, this is just how I live my life. This is what I do. And I think that rubbed off on others as being very, positive. And they're like, hey, I trust Ryan and I like what he's doing. And so that just, I think, just been my mindset of, hey, here's, what I want to do. You only get one life. Let's make the most of it and let's live it to the fullest. And so even though I had a major setback and a tragedy that really, I'm not going to lie. I mean, there were some dark days there of having to deal with this. But what was my alternative? I'm not going to sit and sulk. It was like, all right, I'll come back from this adversity and make something better out of it. And so that's just, kind of how, I guess how I was wired, or how I had trained my brain to really kind of react to, facing a difficult situation. And it won't be probably the last one I'll face. I'm realistic that, not everything goes as planned, but, if you've got a good backup and you can, respond well to it, generally, you can get through those tough times.
I'm curious, like, do you remember a time when you didn't feel this way? Have you always felt this way? Or can you remember a time where you kind of made a decision, like something changed in you that said, I'm going to just like give everything my all now?
I think it was when I really started playing travel baseball, because I was in the in-house baseball league at like 10, 11, 12. And then when I saw this travel baseball, it was like, oh, wow, like I can go play in these tournaments and get some good exposure. And that's when I got better coaching. And then I saw like a real path to like, okay, like maybe I could play in college, and then like I was really good at soccer too, but I felt like baseball was like, the best path forward, because at the time I was like, oh, well, after, college, there's MLB versus the MLS. And I just was like, maybe there's this possibility. And again, it was a long shot. And obviously it just all kind of came together. But I think, I definitely had worked my butt off and, did everything I could. And I think, you put yourself out there enough times, somebody's going to notice you. And that's kind of what happened. And then from there, once you get to that level, now you're playing at a different level and you're around people that push you to get even better. And that's, I guess, something I've always looked at. Like when someone's having success in their life or their business, like that doesn't make me jealous. That makes me want to, get closer to them, learn, how did you do it? And then kind of take the best, attributes of, what got them there and make it my own. And so I think I've always just naturally been curious and just, wanted to be around people who were doing great things. And so, I think that, a little bit of that was just, kind of innate inside of me, but also I think part of it was just curiosity. And then, if you can back that up with, just being very disciplined and have some sort of positive motivation that gets you through those days, I think there's a lot that you can do.
So can you give me some examples of how this plays out in your life right now? So what are the things that you do that I guess are sort of disciplined? Like, what does your day look like and what are the things that you kind of do on a habitual basis that you think are responsible for your success now?
Yeah, I mean, and it's funny you asked that because at the point I'm at now, like I still work really hard, but I've already kind of set the investment, my portfolio in a passive way that like I don't necessarily have to be disciplined right now. I mean, I've made a lot of my investments over a period of time and they're going to continue to keep snowballing and reinvesting. But I would say the biggest thing for me is like, I get up every morning and I'm excited to come and work. Like it's not like a job to me. This doesn't feel like, and I think that's a big part of it, because when I was in the insurance world, it was like, some days you're like, I don't want to go to this sales meeting or I don't want to come in. Like this is just like, hey, I'm just talking to friends and family and people that are interested in learning more about this type of investing. So with someone who's a lot of energy, I can just kind of go all day, but I'm also very organized and disciplined. So I think, the way I manage my calendar and schedule, which goes back to, I think, what I learned at ASU. I mean, we were, in a practice that was run very militaristically, where it was like in 15-minute increments, like you knew exactly what you were doing for the next 4 hours. And so that was just, my thought process when I got into the business world. I was like, all right, I'm gonna be super disciplined and just how I operate. This is what I know. And so I've just kind of continued to stick with that. So I think, after I drop my kids off at school, I come back, I mean, I get into, my day with emails, calls, and I try to tackle some of the hardest things early on, because I feel like that's when I have, some of the most energy and my mind is in the, really good place. So instead of letting those, linger on throughout the day, I'll try to kind of, hit those early on. And then as the day kind of unfolds, between myself and my brother who worked with me, we've got a really strong relationship. We're kind of blocking and tackling, a lot of investor calls, emails, but my day is full. I mean, I still work really hard. I feel like I've been in this startup mode ever since the business has been started, and it hasn't stopped. So I think at some point, I am going to probably need to get a little bit more help, because you get kind of stuck in the day to day, whereas it'd be nice to kind of be able to take a step back and kind of plan for the long term here. But yeah, I mean, as far as the gratitude journal I do every morning, just 3 things that I'm very grateful for. In an environment where it can be stressful and tough, I think it's always good to pause and reflect a little bit. I typically I'm doing meditation a few days a week. I mean, that's when when I know I'm going really hard, I need to just take a pause or just let my mind relax. I will literally, it could be 1 o'clock and I'll just sit down on the couch and take a 20-minute kind of meditation nap, and it just completely recharges me. And so, there's certain things that like I do for mental health that I think is important, because, when you go really hard, you got to take care of your body and your mind. And so, I typically will stay active too, working out. And so it kind of keeps going 24/7, and get some good sleep, and you're back at it for the next day.
So I want to shift gears a little bit and just ask you, how it was that you broke into the syndication as sort of on the active side. I mean, you talked about investing in a lot of syndications as a passive LP. How did you make the switch?
Yeah, so I got involved. Like I always knew that through my teammate's father, through his firm, like we could go and be the active operator. We could go find a market and plant a flag, build a team around that. And, as I was investing myself passively, I got a good exposure to other markets, and being at ASU, I mean, I just saw the growth in Tempe and Phoenix. And so I live in, just outside of Chicago. And, I always tell investors, you can make money in any market. But for me, it was like, I saw other markets where there's just, more job population growth that were better set up for, the syndication business. And so that's where I took the approach of, I had a mentor and I kind of got a feel for what other people were doing. But I early on, felt like I had, pretty good knowledge of like how to invest in this space. So I could speak to past investors because I was a past investor myself and I was just sharing kind of my experience. But when I got in with a few groups early on, one of them was their first deal, the other one was their third deal. And, we just started kind of helping each other out. I mean, they had a need for, capital. They had a need for someone to sign on the loan. They had a need for someone to put up some earnest money. And so I felt like, if I took the approach of partnering with others, I can build this new structure where our investors were getting access to deal flow in multiple geographies with multiple sponsors. Because as a past investor, like that was important to me. I felt like, if I were to go all in on Dallas or something, after 5 deals in Dallas, I might be overweight just in that market. So I kind of was thinking one step ahead of like, all right, well, if this is what I'm doing with my portfolio, why not build this for investors so they can kind of have the same exposure, same experience that I'm having. And, very fortunate that I got in, early with 2 groups who, together we've both, grown over $1 billion in assets in each of the markets that we had chosen. And it's just been, phenomenal ride and we've done very well. And, we've also had a few partners where, hey, we did 1 or 2 deals and decided it wasn't a good fit. So it was kind of like early on, you're looking at these partners as you get into syndication. I mean, you're in it for 3 to 5 years and you got to really know and trust. And I felt like, I got to know my partners really well. And, we just kind of hit it off at a good time in the market and we just scaled the business up and it was just this great partnership. And so I would say between the 2 partners, we've done probably 40 deals together, each of us. And it's been great. And so, I look forward to kind of continue to build that. But I think it was, at the time, a leap of faith. I mean, you're working with, certain people that maybe don't have an extensive track record. But what I saw when I was investing, where I was getting some of the better returns or where I felt like I had, more upside, it was those groups kind of just like, I look at myself like someone that's just a grinder, a hustler, like, they're going to go out, like, I don't care what business they're going to run, but they're going to figure out a way to have success. And that's what I saw in a couple of these individuals who were, going to be my partners. And we did it together. And I think, there's that hungriness, that hustle that, we want to make investors happy. We want to build our track record together. That goes a long way versus I've been in some deals where you're with an institutional partner. It's like, they've already had their run, they've had their success. The deal starts to get more favorable to them over time and there's just less transparency. The communication starts to, not be the same as what it once was. And so for me, it was like, I knew kind of where I thought we would fit best and where investors would, likely see the best returns, the best communication. And so, that's kind of how the journey started. And, we are still together doing deals every month. And it's been a fantastic ride. And I never thought it would happen so quickly. But here we are. And it's been, it's been like a dream come true for me from the real estate perspective.
And how have you grown your investor base?
That all started, it's all been organically. We've never done any advertising or anything like that. It's just been, I started with friends and family. And a lot of this happened from, being in the insurance industry. I was a producer. So I was always out meeting with, the C-suite people that, were, making decisions on their, insurance program. But I also, was talking to CFOs, people that were very, interested in money and investments. And so, I'd be like, well, hey, here's, something that I'm doing too. And they're like, oh, tell me more. And so I just kind of developed like this informal relationship with a lot of people in my network that like, knew I was doing this on the side and knew that I was really passionate about it. But then when I, left my job to do this and pursue it full time, like I literally went through a list on LinkedIn. There was 250 people I kind of connected the dots to. I was like, all right, this is what I'm starting with. And I literally reached out to every single one of them and tried to do a coffee or a call. And I think there was maybe only a handful, 4 or 5 that said, hey, I don't want to meet up. I don't want to catch up and, hear kind of what you're doing. And so there was a very high level of people that were like, hey, let's just catch up. And so I then started sharing what I was doing and how I was investing. And then from there, it was like, well, keep me in the loop. Like, this is interesting. And then, started small and then, kept kind of each deal we would grow. And today, it is, I always say about 18 months in, it kind of flipped where, I've been in sales my whole life. I've never had it where, you just have so much inbound coming in that like you can't keep doing any outbound. And it about 18 months into my business, I had to stop like kind of proactively trying to reach out to people in my network because I was getting several people each day coming in through referrals or current investors or, friends and family that was enough to keep me busy. And to this day, it has kept up. So everything we do really is kind of, through some sort of referral or someone comes to our website. So yeah, this has been no mass marketing. It's just been kind of one relationship at a time. And it's been pretty fascinating to see. And I did have a good group of investors too early on, because a lot of my target market, people I was, talking to, we're in a position where maybe they were, busy working professional or they were running a company. And so, a lot of their friends run companies, or a lot of their friends, were attorneys, doctors, in the sales profession and doing well. So they had the ability to invest. And I think, we kind of all benefited from, the deal flow and opportunity. And then it just kind of spread like wildfire.
What I'm curious, you mentioned your brother and you were in business together. What's your division of labor like? Who's responsible for what?
Yeah, so my brother is a CPA, so he came in. He saw a lot of the growth that was happening, and I think he was in a position where he was doing well, but he felt like there was more that he could do, and he kind of wanted to be on the front lines with me, and he saw the success that we were having, and so he came on about 2 years ago, and so with him and his financial background, he's been really good at the operations end of thing, kind of he's helped with a lot of the investor relations stuff, but that's primarily my role. I mean, I enjoy doing that, but he's helped kind of fill the gap when just kind of becomes a lot. But he's doing it, he loves spreadsheets, he loves reconciling numbers, and so he's been really busy just making sure the operations of our firm run smoothly. And but he's fully involved just like I am. He's my best friend, and he's just very loyal and good at what he does. And so I've been teaching him a lot of the tax element of the business, because I think with him being a CPA, he did a lot in the audit and had some tax exposure. But I'm like, if you can learn the tax element of this game, like, you're going to be invaluable with, your background and what you can do and your potential. And so I've tried to put him in positions where, he can learn that through, the various deals we're doing, the partnerships. Obviously, my tax return is pretty complicated, so I've got him involved to help with that, and it's a great way for him to learn. But yeah, it's one of those where it's not like we have this set agenda schedule. I mean, he knows what he needs to do, and there might be a few things throughout the day that I might say, hey, here's something, let's try to get this done by the end of the day or by the end of the week. And it's been fun to build this together, and it'll be interesting to see kind of where things go from here.
So last question before we have to wrap up. So you're obviously, you're involved in a lot of deals. You see a lot of stuff. What's your take on the current real estate market right now? So what are you seeing?
Yeah, it's a great question. And obviously, to dust off my crystal ball here. But, what I'm seeing is, I take the approach, like, I'm in this for the long haul, right? I mean, are we at the bottom? Maybe. Are we going to go down further? Could be. Are we coming out of it? At the end of the day, I think we're pretty close. I'm looking at anything we're acquiring right now, we're getting at a pretty good discount because we're seeing a lot of distressed sellers, with their loan. And so, I'm looking at like, all right, if we can underwrite the deal and, and we've got some cushion built in there and we're trying to mitigate as much risk as we can, I think in a few years, we're going to look back and be like, we got that deal at a good cost basis, and like, that's kind of my approach. I'm not trying to time it perfectly, but I'm seeing good opportunity. I do think at some point this year, we're going to see a lot of institutional capital come in. I mean, I feel like they've still been on the sidelines and there's a lot of money they need to deploy. So when that comes in, it's going to probably lessen the blow a little bit and create some more competition, which I think is, will be a good thing. But, it's hard to know. I mean, I think we got election year coming up next year. I think the government's going to try to make the economy in a good place for that. So it's hard to know exactly how we're going to get there. But I think as long as we're building a good runway and we've got enough capital, enough reserves to kind of get through this rough patch or this period, whether it's 12 months, 18 months, 2 years, I think we're going to set ourselves up to be in a good position. But yeah, certainly, the deal flow has slowed down. There's been a big emphasis on current operations, but we are still taking advantage of some opportunistic plays in the market, which we're seeing right now. And I think with COVID, kind of a similar feeling, but with COVID, we just didn't see all these discounts. Like we thought there was just going to be a flurry of them hitting the market. We saw some, but it just never really came like we thought it was. And I don't know if this is going to be the same situation or if it is going to be a lot more pain. But we're certainly monitoring it. We're aware of it. But we're also, I love Warren Buffett. This is a time where, people are fearful. It's maybe a time where you want to be a little greedy, and again, no one knows for sure, but we're taking calculated risks here. And we believe, it's going to pay off. And that's why I think it's super important to diversify. You never want to put all your money or all your eggs in one basket or at one point in time. So, again, if you take a long-term approach, I think we've got some great buying opportunities now and maybe for the next 12 months or so. And then maybe we get back to maybe a more normal market that we're all used to. And, we continue from there.
Well, that's a good segue into my last question, which is, if people want to take advantage of some of these opportunities with you, what's the best way for them to get in touch with you?
The best way is to go to our website. It's mckennacapital.com. From there, you can connect with us on all the social sites, and you'll probably be connecting with me or my brother if you reach out. So we're always looking forward to connect with others, and that's probably the best way.
Well, be sure to go check out McKenna Capital and be in touch with Ryan and get on his list. Ryan, I'd really like to thank you for being on the show today. And it was great getting to meet you and get to know a little bit about you and your business.
Yeah, you too, Jonathan. I really appreciate it. And thanks again for having me on.